Hi, everyone. Welcome to our weekly market update. My name is Vinnie. My co-host, David Wright, is currently on the road, so he has some technical difficulties. He might jump in this 10-minute window. Again, this is a 10-minute market update. Try to keep this short and sweet. We'll see if we can get him on, and hopefully he can kind of get some insight into rates here. Let's try him right here. David, can you hear us?
Boom, I'm in. Vinny, are you there? Coming at you live
Yep.
from the desert.
Perfect. All right. See, work never stops, and just like David, everything must go on. So something I wanted to kind of jump into to give a kind of another reference point. We're going to go over the numbers. We're going to give you insight into the real estate market, everything like that. Wanted to bring over the last 2 weeks under 700,000 to kind of give you a reference point of what's been selling. So the first line you'll see right here is the average. The last line is the median. Okay, and then we get the highs and lows. So in the last 2 weeks, right, in San Diego County, the average properties, okay, so average, I'll take you back to math class. The average is you put all the numbers together, you divide that by the number, and that becomes the average. The median is they're all little dots on a line, and you get that middle number. Okay, so I know some people might get confused with the average, what the median is. So that's kind of the idea. So the average properties.
I hope not.
I mean, it can get confusing sometimes. People watching, they might not know, so I'm trying to help out. I know you deal with numbers on a daily basis.
Yeah, you're a helpful guy. You're a helpful guy. You're a helpful guy.
All right.
The masses,
So to give you
the
kind
millions
of
appreciate that, Vinny. Thank you.
give you a reference point that the list price, okay, so the average list price, right, is 504,000 in San Diego County for under 700,000. So you got to think that a lot of them are leaning up to that 600. Okay. The sales price though is 507,000, so a tad bit above, right? For attached properties, detached properties, they're selling for a little bit higher. Okay. Now for median properties, we're talking about 525 with 530 being the actual sold price. Okay, so property is selling for a little bit more than they're asking for, and then the median days on market is 9 days. The average is 32. Okay, so when you're factoring in short sales and properties like that, that can lean and make the number a lot higher. Yet there's also properties that sell before they hit the market that can bring it lower. So the average is 32. The median is 9 days on market. So properties are selling really fast. David, do you want to jump in real fast and talk about rate?
Yeah, let me jump in real quick because I'm actually traveling through the desert right now and I may lose you, and I'm just grateful that I was able to get in. So we had a spectacular week on housing data. It came out. For those of you who remember 2006, 2007, and the volume of sales that we're going through, well, the interesting numbers came out is we're doing more volume right now during this pandemic than was done in 2006 and 2007. So the sky's not falling, but interest rates are falling. Interest rates maintain still being basically in the high twos. Jumbo is 2.75, APR 2.875, but VA, FHA, those are still going for 2.25 to 2.5, which is unheard of, like in this time. And then also you look at the other data that's coming out from the home builders that me and Vinny went over last week. That's still, they're building as fast as they can, but not fast enough, which is limited housing. And overall, lending guidelines seem to be getting a little bit looser now as we're getting closer to the election. So for those of you who are priced out of the market because of FICO scores, those have now dropped. Lending guidelines are looser and down payments are smaller now. So we're seeing the housing market even get hotter than it already is. As far as rates, are they going to continue to drop? Nope, don't think so. I think you hit your all-time low about 3 months ago, but they're still amazing.
Well, talking about basically the market being hot, to give you kind of a reference point of the median sales price. All right, so if you look on this the chart right here, this little dip right there was about May. Okay, May of this year, and that's a little bit under 600,000. Now the top right here, okay, is about August, right? So we're talking a little above 650. So we're talking about like 660, that number. So close to a 10% jump from median sold price, okay, since May to about August. That's quite a jump. And when you factor in interest rates, things like that, be aware, right? The big takeaway though that I would tell for anyone is focus on monthly payments and make sure you feel comfortable, because the prices go up, the prices go down. You can see they've gone up more recently, right? And maybe we might see a more of a lag over the next couple months with the holidays and hopefully like that. And focus on the monthly payments. No one can predict the future. All right. There's a lot of people that think they have that crystal ball, but no one can predict the future. Yes, the market's a pendulum. It goes up, it goes down, and it's probably going to go down again. It's just a matter of when. But all we know for sure is the monthly payment. So focus on that monthly payment.
That's so crucial, Vinny, because the only thing that's certain is uncertainty. And it's about every 10 years we get a dip in housing, and we're at year 12.
Yeah. So, I mean, unless you're buying all cash, and you're buying all cash, maybe unless you get a killer deal, then you buy or hold off until the market goes down. You can hold off. You're not. But if you're focusing on getting a loan, focus on that monthly payment, because there's value still to be had on that property. You can keep it as a rental. Watch our seminars, and you can kind of see that. So going over these numbers again, we go over these most weeks to give you an idea of where the market sits. And with the high pricing, we have 3,700 properties active in the market, close to 5,000 properties pending. Okay, in the 3 million to 700,000, close to even active, depending a little bit more pending properties. In the active properties under 700,000, we're talking about double the amount of properties pending. And in the active detached under 700,000, we're talking about close to 3 times the properties. All right. Now, when you get into the attached properties, it becomes more of that balanced market again. So if you're looking to buy in the lower price points, right, in the more affordable price points, you might really want to look at a townhome, attached properties like that. So talk to your realtor, talk to your lender, see what's possible. In the detached market, okay, we're talking about 1,000 more properties pending on the market compared to active. So when you're talking to your realtor, understand the different markets, the micro markets, to really know the best area to purchase in. Because if you were to buy at the detached market, at the sweet spot, you're going to probably have a high level of competition. Yet if you're looking for a property just for today's market that you're going to keep over the long haul, not try to sell in 5, 6, 7 years, maybe it is a townhome, maybe it is attached property and properties like that. So really understand the market, talk to your lender. And one thing is critical is, remember, you don't lock in your rate until you actually get into escrow. So you can have a great rate today, yet it doesn't matter until you lock that rate in with the lender during escrow.
That is so true, Vinny. And that I also thought we'd throw the tip of the week in there really quick, because I may lose reception, is interest rates are not the same for condos versus single family residences. And the MI is not the same either. So when you see all those advertisements for the lowest rates, those are always for single family residents with 20% down. The rates are different for houses versus condos, and the rate is based off the down payment and the property type. And the MI, if you're putting down less than 20%, the MI is also different based on property type and FICO score and down payment. So those are things to think about, so you're not misled on these advertisements going on everywhere right now.
And if you have questions, reach out. Myself or David, we'd love to be that resource for you. Have fun out there, David, and we'll talk to you guys on Monday.
All right, thanks, Vinny. Bye.
Hey, guys.